Hey guys, how's it going? It's Andy from MagooInvesting. Happy Monday. The market may not be open today, but I decided I wanted to make a video today because I was kind of going through my TD Ameritrade account and I'd kind of forgotten that I bought a company that I felt very strongly about at the beginning of April, and I never really talked about why I bought it. In the past couple weeks, I've been pretty active with buying new stocks. I've made videos talking why I doubled down on my SBUX position and then why I recently bought into Delta. But one of the stocks that I ended up buying on April 1st and then doubled my position towards the end of April has been Nike. And in today's video, I'm going to be talking about Nike stock and talk about the three main reasons why I decided to add it to my long-term portfolio. So at this point, my Nike position is already up 13%, and when I saw that, I was pretty surprised. Currently, the stock is trading for $94, and it's still down 7.5% year to date, and so it still has a little bit of room to go to get back to its beginning of 2020 prices. Before we get started, I have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinion on why I bought this stock. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Now let's get started and talk about the three main reasons why I decided to buy Nike stock and add it to my portfolio. The main reason why I decided to buy Nike is I wanted to invest in this brand. And when I've talked in the past about why I buy specific stocks, one of the main factors that goes into it is it has to be a company that I trust. And based off the fact that I bought on April 1st, which is just a week after what we now know is the bottom of the stock market, unless things fall further in the future, but that was just a week after that, and I decided to pull the trigger, and that wouldn't make a lot of sense for a lot of companies. But the reason I was comfortable enough buying right there is the fact that Nike is such a well-established brand that I feel perfectly comfortable buying going into a little bit more chop, and even if we see a recession in the future. Nike has just become a part of societal norms, and when I think of iconic logos, I think of first the Nike swoosh, and then next I think of the McDonald's golden arches. And so this has become a brand that is ingrained in everyone's mind. Also, I went to college and I still live in Oregon, and so Nike is kind of the hometown team, and it's a company that I've been exposed to my entire life growing up, and now that I've seen how this stock has moved in the past, it made me feel very good about buying in this well-established brand. When you look at the value of Nike and compare it to what I think is its main competitor, Adidas, Nike has double the value. And so you're not really comparing apples to apples. You're comparing two different types of businesses, and Nike is the juggernaut when it comes to the retail athletic apparel space. Also, the fact that their diverse set of products is very attractive. In the past, I've talked about why I love Microsoft, because they have three very equally spread out revenue sources. And when you look at Nike, it's not as evenly spread out when you look at footwear, apparel, and then everything else. But as you can see from this chart I'm putting up right now, footwear is the #1 source of revenue for the company, but apparel has been growing steadily over time. Another reason why I loved investing in this brand is their international exposure. When I put up the charts that show where revenue has been coming from different countries or areas of the world, you can see that North America is the #1 market for them, which makes a lot of sense. But when you look at the trend over time, places like China have been expanding rapidly over the past couple years. And while North America has remained relatively stable, it is the largest part about this business. At this point, when you think about sports and athletic wear, the first thing that most people think about is Nike. And that is the main reason why I decided to buy into this company during a really tough time in the market. And so even though things could have gotten very poorly, and it was a week after the bottom of the stock market, and there was definitely some risk associated with this purchase, but based off of the fact that the brand is so established into pop culture and the swoosh is maybe one of the most iconic logos in the history of companies, made me feel very confident about taking that position. And that was kind of the main reason why I decided to kind of pull the trigger and buy Nike towards the bottom from this recent stock market crash. The #2 reason why I decided to buy Nike stock comes from their last earnings report and their overall fundamentals. When they released earnings, this was on March 24th, which is the day after the bottom of the stock market. So this was probably the worst time in the market, and there was literally no optimism in the market during that time. And so they came out with their earnings, and things looked all right when you first saw it. But when I started looking deeper into this actual earnings report, I saw some really attractive things. And so yes, there were some drops in sales in the North America and China, but there was a lot of really positive things. One of the main things that I saw was their boost in online sales. And when I first saw that, I was like, okay, that makes a lot of sense. But when you go back at just the beginning of this year, Nike announced that they were no longer going to be partnering with Amazon. And so they were going to be kind of cutting ties with Amazon and trying to sell stuff on their own platform, which makes a lot of sense as a business. And so that is always a risky move when you're going up against Amazon. And so far, this boost in online sales might have been really good for the company. And so the fact that these physical stores are closed makes it so the people that are already going to be buying Nike products are going towards maybe the mobile app or online to their website, something that they might not have done before. And so that less of a reliance on Amazon and having to go through their own channels is very positive for me going forward. So from that report, they did have a 5% drop in sales in China, which is, it's not a great thing. But then the next sentence in the earnings report is that they had 22 consecutive quarters before this with double-digit sales growth in China. That is like mind-blowing. 22 quarters, that is incredible. And that makes a lot of sense when we went back to that revenue chart. I'll throw that up again. And you can see how steadily the China revenue has been increasing over time. And so having 22 consecutive quarters of double-digit sales growth, wow, that's incredible. So as I've been talking about, Nike has just been continually increasing in popularity in China. And when from that earnings report, they talked that they had triple-digit increase in digital sales in China. Triple digits. That's like, the double-digit, that's 10%. That's huge. Triple-digit sales in their most rapidly increasing market is like, I can't even fathom how crazy. When I first saw that, I had to fact check it just because triple-digit increase is ridiculous to think about. Now let's start going to fundamentals. When I put up the revenue chart, you can see how steady things have been. There was a drop during the last recession, which makes a lot of sense, but overall, that is a steady increase in revenue over time. Even though there was a drop in revenue in the last quarter, which makes a lot of sense because most of the physical stores have been closed, you can barely tell it from the 12-month trailing chart that's on the top of the screen right now. And so even though there was that little drop, the steady increase in revenue has been very nice. And then when you look at the yearly increases in revenue, there was a 7% increase, which was preceded by a 6% and then another 6%. And so that steady increase in revenue for a well-established company like Nike was one of the main factors that made me pull the trigger and buy into this stock. When you look at cash on hand, it has recently slipped, but it's still at around $3 billion. And so that's not a red flag for me yet. When you look at long-term debt, it has also been increasing. It's now sitting around $6 billion. And when I put up the long-term debt to equity, which I think is really important to kind of put the debt into context, it is currently sitting around 0.69. And so it's probably the highest it's ever been. Actually, it is the highest it's ever been, but it doesn't really scare me that much. The fact that retailers have so much money invested in physical locations, seeing a debt to equity ratio below 0.7 isn't a red flag to me. I do want to kind of point out the fact that their shareholder equity has been decreasing over time and the long-term debt has been increasing. But at this point, having a 0.69 debt to equity ratio isn't a red flag to me, but it's something that I'm going to be watching in the future. And then I'll quickly talk about the dividend because it's about to go ex-dividend pretty soon. And so it does have a dividend yield of around 1%, which isn't amazing. And when you look at the overall statistics for the dividend, they only have 2 years of growth and their payout ratio is around 45%. And so I wanted to talk about it because dividends are an important part of companies that you're investing in. But based off of the 2 years of dividend growth, that isn't a red flag for me. If I was buying this only for the dividend, those 2 years would be a huge red flag. But the fact that I'm mainly investing in Nike because of the brand and having it as a growth stock, seeing the dividend is just something to add on to it. And then as I mentioned, the payout ratio is around 45%, so nothing too crazy or something I'd be worried about it being cut in the future. And then the third and final reason why I took a position in Nike is just looking at its historical returns. We're buying these companies for long-term investments, and when I saw the drop, when I looked at the 1 year chart, things look pretty good. Even though we're still down 7.5% year to date, on the 1 year chart, Nike is up 12%. And so that history of growth is one of the main things that kind of attracted me to mainly these blue chip stocks. I talk about stuff like Microsoft and Nike. When I put the 5 year chart up for Nike, things look really good. And then I throw the all-time chart and it's like, whew, that is a good looking stock chart. I do want to point out that there was a drop during that last recession, but that makes a lot of sense. That a lot of these physical retailers are going to be dropping in value during that time. But I think the fact that they have such strong brand loyalty, I'm not really worried about the next recession, even though at this point I've been talking about it for like 2 months and it's very likely going to happen. But I think the brand loyalty and kind of the consumer trends that we've been seeing in the past will make it so that the drop that we do see during the recession won't be that scary and it'd be enough to have me sell my shares. So based off of that chart, it makes a lot of sense why I wanted to add this to my long-term portfolio. You have the history of incredible returns and being able to buy this incredible company at a discount. I'm already up like 12 or 13% and it's still down 7.5% year to date. So seeing a company like this at such a significant discount was too much for me to pass up. And so this is a company that I will continue to add to over time. The overall goal is to hopefully get to 100 shares so I can have another source of income and sell calls against it. At this point, I'm still significantly below the 100 shares required to do that, but I'm going to be consistently adding to it over time, and getting a cost basis down in the 80s for a company that has been above $100 in the past couple months was really attractive to me. So I will be continually adding to this position over time. Also, when you look at its competition, I talked about Adidas, don't see a lot of positive things with them. You could make an argument for Lululemon, ticker symbol LULU, which has been on an absolute tear this year. I talked about this in my Becky video, but Lulu has done an incredible job in the past couple years. When I think of brand loyalty, I think of Nike, but I'm also seeing some similar things with Lululemon. Especially my girlfriend has been very vocal about how much she loves their products, and so that brand loyalty has paid off for them, having them be up over 20% year to date. Looking at their 5-year chart, their returns are incredible. But one of the main problems I have with Lulu compared to Nike is, one, Nike has the historical returns that go on for significantly longer than Lulu, and I want something relatively stable. The percent increases that we've seen with Lulu are very attractive, and I would absolutely have loved to get on board with it back in 2016. But at this point, if there's going to be a recession, I'm kind of worried that the premium products that they're selling might not sell as well during a recession. And I think the brand loyalty with Nike is strong enough where it'll get them through those tough times, and I don't feel as confidently about Lululemon. That may be because of the fact that I personally use Nike products and I feel more comfortable about it, but Lulu has shown that they've been an incredible investment over time. Alright, so those are my 3 main reasons why I decided to buy Nike stock. So far it's paid off really well for me already. I'm up 12% and the company is still down 7.5% year to date. So there's still room for it to go to the upside. The 3 main reasons I talked about, the first one is investing in the Nike brand. When I think of iconic brands, I think of the Nike swoosh. Living in Oregon right now, Nike is absolutely everywhere, and I felt very confident taking a position in a company that I use on a regular basis, and it's also kind of my hometown team right now. Number 2 reason why I took a position in this stock is their fundamentals are absolutely beautiful, and their last earnings report had so many positive things come out of it. The triple-digit digital growth when it comes to China, incredible. You had 22 consecutive quarters of double-digit sales increase in China before this last quarter where they saw a 5% drop, but that history of increases in China shows that we haven't reached the top for Nike. And so being able to buy it at a discount with these incredible fundamentals and some of the things that we saw in the earnings report was my number 2 reason why I bought Nike. And then number 3, for a long-term investor like myself at this point, or mainly for this portfolio, buying a company that has been around for decades and has shown incredible growth over time was the 3rd reason why I decided to buy this stock. When I show up that all-time chart again, whew, it's absolutely beautiful. And if it can do that for just a couple more years, I will be very happy with this investment overall. I'd love to know what you guys have to say about Nike stock in the comment section down below. I also talked a little bit about Lululemon, so if you have any opinions on Lulu stock, I'd love to also hear it in the comment section down below. Thanks for watching, stay inside, and I'll see you in the next episode.